I'd be willing to bet if you are a dividend growth focused investor that you either own or have thought about owning VOO or the SCHD ETF, and you also dream about a future of financial freedom, to be able to spend time how you want to and live a life where your dividends pay for everything and more. Now, if this sounds familiar to you, please continue to watch this video as we break down both SCHD and VOO, which are two of my favorite high quality dividend growth ETFs. And then towards the end of this video, I'm going to show you the exact math on how any everyday investor can invest a relatively small amount of money and turn it into a fortune in the future. Now drop a like down below and subscribe, and let's get right into it. So first off, going through the Vanguard S&P 500 ETF known as VOO. And like I said earlier, if you are a dividend growth focused investor, you most likely have this ETF in your portfolio already, or likely have considered it in the past. Now, the VOO ETF invests in stocks in the S&P 500 index, representing 500 of the largest US companies. So what's great about the Vanguard S&P 500 index is, of course, it has some of the best and largest companies in the world. Also, it has a very cheap expense ratio of just 0.03%. And finally, because it tracks the S&P 500, this ETF is highly diversified. Now, VOO's performance over a long time frame definitely speaks for itself, but since around 2010, this ETF is up 279%, and that's not even including dividends. Not to mention right now, VOO is trading towards the middle end of the 52-week range, so with the way VOO has been trading as of recently, it could potentially be about an opportunity for long-term buy and hold investors. Now, VOO is a massive ETF with 322 plus billion in assets under management. And because VOO is more of a dividend growth focused ETF, that does of course focus more on growth because of the S&P 500 holdings, VOO is also going to pay a dividend. Right now, VOO is offering around a 1.59% trailing 12-month dividend yield, but the dividend growth that VOO has is pretty substantial. Dividend growth meaning how much it's paying in dividends versus 12 months prior. Now, the dividend growth rate for VOO on the trailing 12 months is around 7.23%, which is pretty impressive. The 3-year CAGR is 5.2%, the 5-year 6.1%, and the 10-year is 7.11%. So although VOO doesn't offer a massive starting dividend yield, with the dividend growth and of course the potential of really seeing some compounding gains when it comes to the actual ETF price, VOO is definitely one of the best growth ETFs out there that an investor with a relatively small amount of money can buy into and build wealth substantially if they stay invested long enough. But now quickly going over the other ETF that we're using for this example of how any everyday investor could invest a relatively small amount of money and be left with a fortune when it comes to retirement time. The Schwab US Dividend Equity ETF. This is by far my favorite ETF personally, just because this ETF aligns with more of my personal investing goals. Now, SCHD has an expense ratio of 0.06%, so even though it's double that of VOO, it's still a relatively very cheap expense ratio. Now, SCHD's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index, and this index is made up of around 100 different dividend-paying stocks. Now, SCHD, a lot like VOO, has a pretty good looking max time frame chart up around 171% over the last 12 or so years, and once again, not even including dividends. SCHD also is a massive ETF with around 47 billion in assets under management, and SCHD is trading way further towards the low end of the 52-week range, which means this ETF, at least in my opinion, and by the activity in my current brokerage, it's offering a buying opportunity which I personally am taking advantage of. Now, because VOO tracks the S&P 500, it's not necessarily worth it to go through all the top holdings, but for SCHD, for example, the top 10 holdings are things like Amgen, AbbVie, Chevron, PepsiCo, Merck, Pfizer, Coca-Cola, Broadcom, Verizon, and Texas Instruments. Now, even though not necessarily every single one of these top 10 holdings is my favorite stock in the world, the SCHD ETF does go through a yearly reconstitution, so we could see some of these names get shifted around within the next 6 months or so. Now, I showed you a second ago the growth that SCHD has had as far as ETF price return over the past 12 or so years, but not to mention the SCHD ETF offers around a 3.73% trailing 12-month dividend yield, which makes it double the amount of cash flow compared to that of VOO, for example. Now, this is definitely impactful for me personally because I want to use my dividend income in the future to pay for things like bills or just everyday living expenses. And I'm not saying that it's necessarily wrong to just sell off some shares when you want to retire and then use that money to live your life and pay bills, etc. But for me personally, I want to build a massive compounding snowball, which spits off money to me every single month or every single quarter, and the SCHD's starting dividend yield of around 3.7% could definitely have the potential to do so. Not to mention, SCHD has a very healthy dividend growth rate. On the trailing 12 months, 5.7, the last 3 years, 11.4, The last 5 years, 13.6, in the last 10 years, 11.11. Now, only time is going to tell whether or not SCHD is going to continue to pay more and more in dividends as time goes on, but one thing's for certain, it has in the past. For example, around 10 years ago, SCHD was paying anywhere from 25 cents or maybe 27 cents per share per quarter, and now it's paying nearly 3 times that. But now, just like the title of the video said, I promise that just a $50,000 investment into something like the SCHD ETF or the VOO ETF, invested over a long enough time frame, could completely allow any everyday investor to most likely be able to retire and live off the dividend income and or just the major future net worth. So for example, if we were to look at SCHD and type everything into the dividend calculator, a $50,000 starting balance, a distribution frequency of quarterly payouts, drip turned on, which means all the dividends are going to be reinvested, which is crucial to have the compounding effect take place. Then an annual contribution on top of that of around $5,000. And of course, as far as annual contribution goes, you could of course contribute $0 moving forward or a lot more, but for this example, we're going to go with $5,000. Then a 3.73% initial starting dividend yield, an 8% annual dividend amount increase, which is somewhere in the median of what we've seen in the past, 3% annual share price appreciation, 30 years invested. Let's see what this investor could expect by buying $50,000 worth of SCHD after 30 years. So way at the top, year number 1, this investor would have a $50,000 investment of SCHD and will be earning around $1,891 per year in dividends, not even close to live off of, not really all that much money to do much off of at all. So if you reinvested everything and put it back in, by year number 2, $58,000 is now earning this investor $2,300 per year in dividends. Now, just a side note, I definitely implore all of you guys to mess around with these free online dividend calculators, as they really start to open your eyes on how the power of compounding works, and honestly, you can just make up different theoretical situations that might match your investing strategy. Now, by year number 5, $86,200 plus a principal, just by reinvesting all the dividends and adding in $5,000 of annual contribution, which again could be lowered or higher. Now, by year number 5, this portfolio is already almost a $4,000 in annual dividend income, which again is great, but not necessarily even close to enough to retire on. By year number 10, $151,000 plus in principal now, and $8,800 per year in dividends. By year number 20, you would in theory again have around $445,000 plus of SCHD, earning you around $42,000 per year in dividends. Now we're starting to get closer and closer to what we could assume a salary would be, even though when it comes to inflation, the numbers will likely to have to be a lot higher. Now by year number 25, $815,000 and $100,000 just about per year in dividends. By year number 30, $1.63 million and $250,000 per year in dividends. So as you can see, by year number 20 to 30, the power of compounding really kicks in and the numbers have a lot more to work with. So they get much bigger at a much faster rate. But just hold on one second, I promised you that this could be done with either SCHD or even VOO, an initial $50,000 into the VOO ETF with a 1.59% initial starting dividend yield, an 8% annual amount increase, 8% annual share price appreciation, a quarterly distribution drip turned on, and $5,000 extra per year. Let's see what VOO gives us. So for year number 1, $50,000 invested into VOO is only going to give you around $800 per year in dividends. This is because of the much lower 1.5% dividend yield. But by year number 5, this portfolio is already almost doubled because of the appreciation and how fast VOO has grown historically. We're going off of some of the median numbers. Almost $100,000 already with over $1,500 per year in dividends. Year number 15, $308,000 with $5,000 per year in dividends. By year number 20, this portfolio is at $512,000 with $8,200 per year in dividends. And by year number 30, all the way at the bottom, this portfolio would end off at around $1.461 million. And again, these numbers can change drastically. We're just going off of some basic math, looking at some averages. But either way, an investor that started with $50,000 and invested a relatively small amount of money per year and let dividends do their thing would be able to easily retire off of VOO or SCHD. And of course, things like more contribution is going to speed up the process, or even a larger starting principal. The power of compounding is a magical thing, as we've seen from these few examples. So there we have it, proof that any everyday investor with a relatively small amount of money to start with, invested into the SCHD ETF or VOO, could easily surpass the amount of money they're making at their day job and more. Now, like I said, of course, earlier, it's all going to depend on how things like VOO or SCHD perform in the future and how fast they increase their dividends, for example. But the bigger point is that you don't need to be a multimillionaire to invest in the stock market to buy into high quality, low expense ratio funds like SCHD or VOO. But now I want to hear from you guys down below when it comes to building out a long-term dividend growth portfolio. If you could only invest into either SCHD or VOO, which one would it be and why? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.